Good afternoon, everybody. Welcome to your TraderMerlin show for Wednesday afternoon. Hope you all had a good session out there. I'm sorry if my voice sounds crackly, and I'm going to make it a short show today. I've been teaching since 7 o'clock this morning, so my voice is kind of gone. Did a crypto focus class for OTA this morning, so that was fun. It's always great to talk about what's new and entertaining, and the digital asset world is full of all that good stuff. Now, a couple things. I mentioned on yesterday's show that I had two donkeys of the day. And I went through my donkey of the day yesterday, which was Ledger, which is just crazy how stupid they could be to release something like that. And I said I would do another one today, but I'm not. I'm going to actually make a whole show about this donkey of the day on tomorrow's show. So our Thursday program will be all about a donkey of the day. Maybe the donkey of the week, the donkey of the year, it can't be the millennium. There's got to be dumber people out there. But we will bring up a full show tomorrow dedicated to that. So today, as you saw from some of the titles, it's all about the default. And we know we have until June 1st at least. There might be a little bit after that before we actually get the default. But the question is, what on earth is going to happen? So I had this question come in from John who says, what happens if the government defaults? And I thought, that might make it easy for me. It's a real kind of a quick rundown of this debt ceiling countdown and what this might mean for us going forward. So I'll get into what might happen. Obviously, nobody really knows for sure. We haven't defaulted, right? We've gone past the deadline, but we haven't really defaulted on debt. We've gone past the debt ceiling, but never defaulted on debt, which I think would be absolute catastrophe here for the United States. So many of you probably looking at these markets today thinking, well, why did we surge like we did today, right? Why were markets generally looking pretty good? Russell's up 2%, Dow, S&P, NASDAQ each up 1%. Let me bring up some charts here so I can show you that one. I've got all this done from yesterday. Really no time to prep for today. So here is our top 7 that we normally like to look at. And you notice the S&P, 1.16% gain today, looking nice and sweet. NASDAQ continuing on. Notice where NASDAQ is at right now, up 1.19%, smack into that overhead supply zone we talked about, which is right at 13,630. The NASDAQ 100, Dow is up 1.22%. The Russell looking great, up 2.24. And you got to ask yourself, well, why is that? Why would cause this market to rally? Well, there's been this overhead pressure, no pun intended, with the debt ceiling involved here, but this overhead pressure that we're not going to get the debt ceiling raised. It seems Senator McCarthy and Biden are having a pissing match on who's better and who's going to get their way. And they'll keep pushing and slandering the other side for not getting their job done or not doing their part or not doing their cuts. It's just the typical joke that goes on with elected officials in politics. But at this point, Kevin McCarthy seems to be kind of holding up the show a little bit because he's drawn the line and says, no, if we're going to raise it, we need this and this and this. These are the things we have to have, non-negotiable. And I get that. You got to stand your ground and fight for what you believe in, but not at the risk of every single American. There are certain things that need to be backpedaled on. So there was a form filed yesterday by Brendan Doyle, who's from Pennsylvania, I believe, and that's called a discharge petition. Now, you might remember when we had John O'Donnell on the program the other day, we ran through kind of 5 possibilities. What could happen with this default that may happen, and what are some ways around it? And John and I both agreed it's going to be a kick the can down the road. We'll get a slight bump up. We'll wait till December, which of course will even further exacerbate the problems. And I did mention a long shot. I said there's this thing called a discharge petition, which will allow them to force a vote without McCarthy agreeing. So he's been saying, no vote on this, no vote on this. They can do a discharge petition, which is a really complicated process. There has to be an inactive measure or initiative proposed. I think it has to be enacted for 30 days, and then they have to wait 7 days to get all the signatures, and then after that they can put it to a vote. Well, they got the signatures today, so they're signing now and getting this done, and they need 218 House members to sign this to pass it. Now, most likely all the Democrats will sign it, but the question is there going to be enough from the moderate Republicans or just any Republican who would sign it? I believe they need 5 Republicans in order to push this through. Now, even if it gets through, it doesn't mean we're going to raise the debt ceiling. It would just makes politics even more and more confusing and annoying to me. So that's, I think, part of the reason you saw the optimism today is, they're looking at pushing this through and raising that debt ceiling, therefore all is honky-dory. So I got to say, hold on a second. I don't think it's all honky-dory from here. You know, if you look at some of the numbers, we're in pretty bad shape. So here is Dukun. Welcome. Hot Atlanta. We got Arizona, Hot Atlanta. We got Raleigh in here, Fort Worth, Texas, A options merchant. And you're right, debt ceiling equals tradable volatility. Yes. You know, and today, if we break this down to, let's say, a 5-minute chart, all right, let's bust this down to a 5-minute time frame here. You know, if you look at the move that happened, this was a beautiful day. I mean, it was just up, just go, pretty much all day, flattened out near the tail end of it, but this great move up from the open on. Beautiful day. So I'm hoping some of you guys capitalize on that intraday move. And you're right, lots of volatility. It's a good thing. No problem there. Let's embrace some volatility. So I brought up this graphic, which is from Yahoo Finance. I did not create this one. You know, it's really kind of funny. It looks almost like this is the Pantheon in Rome. If you look at the ceiling there, but they looks like they put a cap on this one, so it's not quite the same. This is the federal debt and the legal borrowing limit. So we're there. Right, as of December 16th, 2021, the debt limit currently is at $31.38 trillion. And I look at this price chart and it's like, you know, the trend is your friend until the bend at the end. And it doesn't appear like there is a bend coming at all. So, hey, if you're long this, go long debt. It seems like that is not going to end anytime soon. And you notice that there's some little spikes here that break above. This is how many times we've breached that debt ceiling. And you can see currently, we just recently spiked above it. So there is a lot of money being spent out there. And to kind of put into perspective, I thought it would be interesting to run through some of the numbers here. If you look at the monthly balance sheet, and I need to read these off the screen, so I apologize for looking off screen, but everything in our lives should be a formula with regards to income. If you're running a business, if you're running your personal finances, it's a simple formula. You have expenses and you have liabilities. If more money is and income. If more money is coming in than is going out, then you're doing well and you probably move your best way to prosperity, right? If your expenses far exceed your income, you got a personal financial problem and you need to fix it or you're running into bankruptcy. And that's the situation. The receipt totals for the month of March, so that doesn't even include April, but March were the U.S. government brought in $313 billion in revenue. That was $151 billion from individual income taxes, $133 billion from Social Security insurance and retirement taxes, and $11 billion from corporate income taxes. That's crazy, isn't it? We're sitting there paying, collected $133 billion in Social Security insurance, retirement taxes, and only $11 billion in corporate taxes. To me, that is a little bit of a problem that corporations just paying so little. Anyway, that's $313 billion coming in. Any guesses, anybody? Bueller, how much do you think we spent in the month of March overall? So we had income of $313 billion. How much went out in March? What were our outlays? And I'll give you some numbers here to think about. We had Medicare, we had Social Security, income security, health spending, national defense, and interest on debt. So funny, we brought in $313 billion, and just for fun, I'll start with the interest on the debt. This is jaw-dropping. So we brought in $313 billion, but the interest on the debt was $67 billion. Just on the debt, we have $67 billion. So Mark says 15% higher. No, brother, way higher. Way high. If you guys were in this personal financial situation and I was your financial advisor, I would play tough love. I would be so mean to you, but meaning it with love, and hopefully I can fix your problem. But if anybody has this type of financial situation, you need to be slapped big time. Koja, not quite $2 trillion. We brought in $313 billion and we outlaid $691 billion. That's over double what we brought in. If any of you or I have that as our financial metric, we're broke. We're going bankrupt. It's just a matter of time. And what's happening is they'll issue more debt and then they have to pay more service on that debt. The part that blows me away is $67 billion in just debt interest. The interest on the money that we have borrowed to cover their asses. So something's got to change. One of two things need to change. Either the outlays need to drop significantly or the income needs to go up significantly, right? That's just amazing to me. Amazing it's that bad. So I'll run through some of these numbers so you can see, as John O'Donnell and I believe, that the ticking time bomb is unfunded liabilities. And that is Number one, Medicare. They spent $115 billion on Medicare for the month of March, $115 billion on Social Security, $87 for income security, $86 billion for health spending, $84 billion for national defense. Those are numbers, especially like the Social Security. This is money that you've promised to people. So can you cut that back? Oof, that's going to be a tough one. And saying that they can spend so much more than their income. I know, Lori, I know. When I work with people, and I worked with some good friends here, when I work with some really good friends at getting their personal finances up and helping them out, the main things I'll look at is right away, I said, just run an analysis of how much money you're bringing in and how much money you're spending. Not one person that I have ever worked with, and I'm not a financial advisor, I do it because I understand this stuff and I want to help my friends move ahead. So that's the gist of it. But I've never gone through any of my friends' personal financial statements with like, oh, okay, yeah, I'm making $6,000 a month, but I'm spending $15,000. That's pretty much the equivalent here of what the U.S. is doing. Ridiculous. Rein it in. All right, let's cut that spending. And I know I'm not trying to sound like a Republican. I think the Democrats in the room and the Republicans in the room right now would both agree we've got to cut spending, right? I'm not saying raise taxes to increase income, but the spending seems like it's just out of control. And there's got to be some happy medium there. So bottom line is the U.S. is in a very, very difficult, messed up spot, and it's going to create a ton of volatility going forward. Naum says, who do we borrow from? The Fed. So we don't borrow from the Fed. What happens is the Treasury Department issues bonds. So when you buy those 10 years and those 30 years that are treasuries, that's them raising money through debt. So when they do a $100 billion round of bond sales, they sell $100 billion worth of bonds. Government entities around the world, so it could be China, could be Japan, could be the UK, could be European Union, could also be the Federal Reserve, which is buying a lot of treasuries, but they're buying those bonds. And they buy those bonds because they need dollar-denominated assets because the dollar is the world reserve currency. That's a big factor to it. But they'll buy those bonds. That's how we're raising that money. They'll just say, hey, we need more money, issue some bonds. And now as interest rates are going up, the cost of our government debt is getting more and more expensive. Like Bill Addis had on the program, and he said I forgot the number, but it's like 1%, it ends up being $1 trillion worth of interest extra on the debt we currently own, even if it moves up 1%. Nuts. And we've seen such a huge spike. This is, part of the reason we're seeing such a big problem is the servicing of that debt. Again, $67 billion for 1 month alone in our debt is insane, and that's not going to stop. They'll keep selling those bonds, and if international people don't buy bonds, the Fed will, which, again, the Fed can print money out of thin air. That's the crazy part is the government can print money out of thin air, and they issue these bonds. Drives me nuts. What did Lori say out there? I see, well said. And saying they can spend so much more than their income, and saying that anybody could do that. We let them. Well, we voted people in, but once people get in there, boss poopa, I don't agree. I don't personally believe that they have the best interests of the population at heart anymore. It feels like they're self-interested. Unfortunately, that's me. Remember, we see about 7.5% tax for Social Security in our checks. Corporations match that. Social Security taxes over 15%. Yeah. Yep, that's true. Doesn't inflation pay down the debt? Well, a weak dollar helps pay down the debt. Inflation doesn't, because as inflation goes up, what happens is that it makes it worse. So, for example, if I'm the U.S. government and I'm going to be issuing bonds, the lower the rate environment is, the better, because I can sell all this debt really cheap, which is what we had for a very long time, from 2009 to 2000, call it 19, 18, even actually 15 before they started raising a little bit and then came back down. It was cheap. So they could borrow all this money from populations and governments, issue bonds, and sell them at a very low interest rate. But as that interest rate starts to climb, as it has here recently, that is difficult now for the government to issue those bonds at a low rate. They have to pay a higher rate. So the more inflation we get, the higher the yield of those bonds is going to be, and therefore putting an extra crunch on government. So I would argue that inflation is actually worse. What does help the bond market, or the debt cycle, is if dollars all of a sudden get very weak, right? The weaker that dollar becomes, the better it is overall for paying debt. Let's see. We need debt ceiling on the Fed printing money. How about this, Andrew? We'll take it one step further. We need audited Fed. I don't know if you guys saw, but there was I forget which representative it was from the Fed. was asking about being audited, and it was like evasive. Even though I think the Secretary of Defense as well was just squirming in their seat about being audited and where all this money goes. That would be a very interesting one, but again, we don't have that. So we really need to become fiscally responsible, no matter what exactly. And I apologize. I'm not trying to go after any. I would argue I'm moderate. There's some viewpoints I have that are liberal. There's some viewpoints I have that are conservative. But I'm really middle of the road. And I'm the type of person, I'll listen to both parties and see who's got the best ideas for the country, regardless of the D or the R next to it. It makes no difference to me. It really bothers me that you can say you're one side and the other side immediately hates you. I go back to when I was a kid. I remember my parents talking about politics openly, and someone's like, "Oh, you're a Democrat? Oh, cool, I'm a Republican." Amicable, friendly. Nowadays, man, you say you're a Democrat, and somebody's like throwing stuff at you. "Screw you liberal piece of crap." Like, well, hold on a second, man. There's extremists on both sides of this. So anyway, let's not go political here. I can get in trouble here. So what else did I have there? Dual innovation plays in debt. Yep. Yeah, exactly. We're all part of the same family. In this case, whether you like the president or you hate the president or the previous president, doesn't matter. We're all Americans at this point, or most people here are Americans, and we have to act like it and hopefully make our country better. Audit all spending. Dokum, that would be a difficult one to do. I argue that'd be exceptionally difficult to audit all the spending that's going on. But this is why I was joking the other day. I'd love someone like Elon Musk to be in charge of something like that. He seems like somebody who cracks the whip big time. So anyway, I'm rambling on here, but let's go to the question here from John. What happens if the government defaults? And I believe that there's a misconception that, instantly we are plunged into chaos. The streets go dark, the sun won't come up for another 6 years, and, just looting and pillaging and, get your shotgun. That's extreme. That's not going to happen. We've breached the debt ceiling before, and what they'll do is they stop payments typically to certain government jobs. We saw the parks get shut down, the parks were closed, national parks were closed for a while. That's kind of that first step of the process. Then, if this does get prolonged and there is an actual default where we say we're not raising and all of a sudden we have to announce a default, then, I apologize for cursing like this, but the proverbial shit hits the fan. And now, it's really on Janet Yellen to prioritize who gets paid and who doesn't, right? If you say we have, I'm making numbers up because I don't know them off the top of my head, but let's say you've got, $1 trillion worth of bonds issued by the Treasury all over the world, and you stop making those interest payments to those bonds, now you're talking war, right? That to me is probably one of the last things. If you stop making those payments to that bonds, all these countries are going to be immediately hostile to the United States. So that's not going to work. So what do? Do you start cutting Social Security? You start cutting Medicare? Do you do what France does and say, hey, we're going to raise Social Security now from, 60, what is it, Sal? Is it 69, 60, 67 and a half? I think it's 67 and a half. We can jump that to 72, right? I'm just throwing crazy hypotheticals out there because I don't know what the answer is. This is why I don't want to be a politician. They're going to have to do something here. Otherwise, it's going to get progressively worse. Now, if there is a default, what will immediately happen is those yields on new bonds, especially those new bonds being issued, whether the short-term treasuries or long-term, the yields on those are going to surge. You're going to see real significant spikes on those yields. And why is that? Because now anybody buying a government bond is going to question the integrity of the bond seller, thus the American government, which just defaulted. So if that happens, your 30-year fixed 30-year bonds that you're looking at, 3-point-something%, let's bring them up right now so you guys can see that. 3.86% right now. That'll be at 5% within a week. It'll just go straight up because the government is going to have to pay more to convince people to buy the junk that they just defaulted on. Right? That's going to be a very difficult one. You can't say you're a Republican here in California. Yes, you can. Go to Newport Beach, Pepe. Newport is totally Republican, big time. I think a lot of the country is middle of the road, and the crazies on either end are much louder. Unfortunately, you're right, Lori. I think that most people are middle of the road. Maybe you start to polarize. For example, I have one friend that it doesn't matter who is running for the Republicans. It doesn't matter whether this person shot somebody, murdered somebody, or is an angel. He will vote for that person no matter what because his family has always been diehard Republican. And I know that there's people like that on the Democrat side, and I think that that's wrong. But, part of being human is having a discourse with both parties and saying, all right, let's do what's right. The key here is we have to do what's right for America, for this country, not just the elected officials. And I think that some of that gets lost in this. So bottom line, we'll wait and see what the volatility looks like. I would like to know what the federal weekly payroll is. More importantly, I'd like to see what the trends of federal weekly payroll are, right? So there's obviously, it's a ton of money. And if I were to reference a number now and say, oh, it's 100 billion a week. I don't know if that's a lot or a little, right? Now I need to see historically what has it done. My assumption would be that you've seen a very significant rise in the federal payroll. So there are certainly some jobs need to be chopped. So obviously you've got this discharge petition that the Democrats filed yesterday. That's going to create a little bit of optimism here, but honestly, I don't think it has a chance of making it through. It's just a very weird, rare tactic being implemented right now. What would happen to our markets? First thing, rates are going to soar. Rates are going to skyrocket. You can see very high yields. So those of us who refinance when your fixed rate mortgages are under 3%, you can walk around with a crown on your head and never pay that one off. Do not pay more. Don't pay that one down. Just keep paying your minimums because you got the golden ticket if you signed under 3% for your 30-year fixed rate mortgage. Matter of fact, it might be interesting if some of these companies actually call the mortgage and say, yeah, you got to pay that one early because now we're looking at 8-9% for our 30-year fixed rate mortgage. Who knows how bad that could get. The other side of this would be the equity markets would probably take a pretty big hit. Obviously, in a default situation like that, I'm trying to put the dominoes in place and see what might be next. I think a lot of companies are going to go into absolute crackdown mode with regards to jobs and do more layoffs and get rid of the low-lying fruit there and go down to bare bones for a while until this passes. If that happens, you could see a lot of layoffs happen, more unemployment, and then I guess the real kicker would be how far down would the equity markets go? How far would they plunge? Because now a lot of people would be forced to maybe sell some of their investments to cover their unemployment. I'm going into, this is catastrophe mode, which I don't think we're going to get to, but just putting it down as a possibility. You start to see these equity markets really crash, which at some point will create some epic buying opportunities. What did you OMG to? Let's see. Blue Diesel question. When you say Social Security, do you mean old retired people's Social Security? Correct. Yep. Both political parties' extremes are bad for the big picture. I completely agree with you. Right. Yes, do what's right for Americans. Yeah, I agree, Andrew. It's just hard to. It's easy to say. It's hard to do. I part of me one point thought I'd love to get into politics, but it's just not my thing. I am not a politician. Nope, I don't want to do that. You mentioned how important it is to cut spending. Name one Democrat who talks about cutting spending. Well, and that's part of it. Is the Democrats are not about spending, right? Democrats not about cutting. Democrats are about increasing spending. They increase spending, they increase taxes. So when you look at those equations we talked about, money coming in versus money going out, we have to find a balance there. So in a perfect world, we would increase the income and we decrease the spending, and all of a sudden we find ourselves at a surplus. Probably not going to happen, right? So the Democrats, what do they want to do? They want to increase income by taxing, but then keep on spending. So the equation doesn't change its balance. On the flip side, you have the Republicans who are saying, let's cut spending, but also let's lower taxes. So instead of the equation moving up for Democrats, the whole level starts to move down for Republicans. You're not coming to a compromise. The compromise should be either you find ways to increase a little bit and you decrease your spending a little bit, and now all of a sudden those things come into balance. With Republicans, it's no new taxes, don't want new taxes, and I don't want to spend anymore. Okay, well, now we're stuck with that equation that's in balance. And Democrats say, well, we want to raise taxes and you want to spend more. So the equation stays in balance. It's kind of a mess. Yeah, Clinton did. Clinton was, I think, the last president that had a budget surplus. Regardless, they're making big financial mistakes. And I think that this dance back and forth is going to cause problems for us as citizens. And that's the real problem, right? Especially Social Security. Like, I feel if they start making cuts to Social Security, there's a lot of people out there that are going to be tough. I agree, Lori. I would say they're both wrong. Well, look, I would say this is the political side. I would say they're both wrong and they're both right. I totally agree with the Republicans then that you need to cut spending. Right? We got to cut spending. I disagree with the Democrats that they need to jack up taxes. If we simply cut spending and kept taxes right where they're at, all of a sudden we come into balance. Merlin, if I bought $10 million of 30-year bonds at 3.5% interest rate, where are that 3.5% coming from or paying me? If they're spending more than what they're making, are they printing out my 3.5%? Yeah. So what they'll do is they're actually issuing bonds to raise money to pay the debt. That's part of the equation, right? Because if I have $313 billion coming in and I have 691 going out, I got to make up for that 378 billion dollar deficit on a month. So I need to be selling bonds. I take that money and now I got to look at all my liabilities and say, okay, well, I got to service the debt first, because if the borrowers of our debt don't buy our bonds anymore, we're screwed. Period. So that's the big factor, right? It's a good point there. Your 3.5% 30-year bond that interest is being paid by other borrowed bonds, most likely, or some part of that $313 billion that's coming in. Some of that is going to you for your interest payments. And again, if you stopped receiving those payments, would you ever buy a U.S. bond again? Your trust is out the window, so they can't do that. That printing sounds and looks like inflation. Yes, it does, brother. Yes, it does. You're increasing money supply, right? Increasing the money supply increases inflation. So it is, I got to take a step back and just go, okay, I got to take care of myself, because this sounds like an absolute fuster-cluck. I did it. I said it right. A fuster-cluck. I would not want to be on the Republican side, the Democrat. I don't want to be a part of that. So let them battle that one out. It's going to get really ugly. Now, Tom says, in business, you can do a 10% staff cut, 80% in Silicon Valley, Twitter. I'd love to see the government start with 20% cut, allowing managers to let go whoever they want. Yeah, I don't know if I'd want to let them get rid of whoever they want. I actually would rather have somebody come in and evaluate. I believe his name was Al Dunlap. They called him Hacksaw Al Dunlap. They used to bring in this guy to companies that were struggling, and he wouldn't just start letting the managers choose. He would go through that company and just start evaluating everybody, and managers would get chopped too. Because there's a lot of these fat cat managers that ain't doing squat, sitting there just collecting a fat paycheck and letting everybody else do the work. So I think that you got to start up top and then you'll work your way down. The bottom level stuff, you can replace those employees rather easily. No offense, but the entry level workers, fine. Some with little experience, fine. It's those top level ones that I think may be abusing their power and time and tenure by staying there and just milking the system. So I'd rather have someone come in and kick ass up top, right? Someone come in like an Elon Musk, which can you imagine if Elon came in there and said, let's get rid of 80% of the government? That balance would shift, folks. We would now have a lot more money coming in and less going out. Very interesting stuff. Using one bond to pay for another. That sounds like a pyramid scheme, right, Ganesh? If you look at the definition of a pyramid scheme, you have one person convinces two people to buy a product. And the two people that just were convinced to buy now have to convince the people below them to buy. It sounds to me like this bond thing is a Ponzi scheme. It's a government orchestrated Ponzi scheme, which is why John O'Donnell and I talk about fiat currencies as being dangerous, right? Because now you have the Fed with infinite money and the government theoretically to buy whatever they want. So they're buying their own debt. It's like the drug dealer getting high off his own supply. It sounds great for a while, but ultimately you're just burning through your own money, and ultimately it's going to end up killing you. So, crazy. Yep. Ponzi scheme. You got it, Koja. I know. It's scary. Kind of freaks me out a little bit to think about it. And I don't mean to be a doom and gloom person. These are facts, people. I'm not hypothesizing. It's fact. You can look at the expenses of the government and the income of the government and say, this is a poorly run business. If you ask any economics professor to evaluate the balance sheet and the government as a business, it's probably one of the worst businesses in the history of mankind. Unbelievable. Now, have you and I benefited from this colossally poorly run business? Absolutely we have, because they propped up the markets, they propped up the housing market, they propped up the equity markets, they've given us all kinds of services and stuff like that. So I'm hypocritical for chastising them for their poorly run business. But in one side of me, I'm thankful, but I'm also very astute to the fact that this house of cards, at some point, will probably come crashing down. I don't know how it's going to happen or when or where, but we got to be careful. How will the Ponzi scheme deflate? And Ganesh, that's the multi-trillion-dollar question. I don't know. Part of the reason I like the cryptocurrency and digital asset space, I know some of you don't, that's okay, is that's now outside of government control. It's not going to be manipulated by the government failing. Actually, I think a government failure would cause Bitcoin to surge because it's hard money. You can't make more of it. You can't print more. So that's one of the reasons I'm hedging with crypto. The other part of it is I'm just being very careful with my investments. I'm doing shorter term trades with options, collecting premium. So when this thing does start to fall apart, if and when it does fall apart, we haven't seen it fall apart yet. It's been going on for way longer than my lifetime. It's just picked up a lot of speed in the last 30 years. Then I'll be looking for those long-term buying opportunities, going back and buying these big dips, which could be a generational type of play. But it all depends on what happens. And I have no idea. I don't want to sit here and claim to be some oracle that's going to say, oh, this is exactly what's going to happen. None of us can, right? We can all hypothesize. And I think what's important is to have a strategy that says, okay, if this happens, I'll do this. If this happens, I'll do this. If this happens, I'll do this. So I've kind of been waiting for more of a default for a while now. So I haven't been doing long-term holds. Mainly swing trades, looking for options, monthly stuff like that. That's fine with me. But I don't want to put long-term purchases out there. Larry is really about the long-term buy. Build that portfolio. It's funny because Larry does a long-term portfolio, but he also does, short-term options, zero-date expiration type stuff or weekly options. So, you can play both those fences, but Larry likes to have a long-term portfolio. And to me, that's crazy right now. I just don't feel like that's the way to go. All right. Anyway, that's a long-winded explanation, or not explanation, just thoughts on what's going on with the debt ceiling. And I think that this is, for the next 15, 20 days, is going to get real ugly, right? Real ugly over the next 20 days. Now, lots of fighting, lots of issues. Yep, Mark says Japan debt to GDP 265%. What the U.S. now is what, 130, 160? U.S. I think I know we were rocking to the upside. Public total, that's public debt. Actually, you know what? I'll go here to debt clock, U.S. debt clock. This is a great website, by the way, for anybody who likes this type of stuff. Go here and go U.S. debt clock real time. So what's our current debt to GDP? We're only at 120. I thought we were higher than that. Right? Only 120. But you look back in the 60s, debt to GDP was 50%. In the 80s, 34%. 2000, 57%. And now we're at 120. So it's definitely been ripping to the upside. Naum says 129. Yeah, we have a ways to go to get there. Yeah, we don't want to get there, guys. You do not want to get to a 200+% GDP. But that's what's displayed. Who knows if this number is actually that accurate? But this is a very depressing page, especially when I look up here the amount of debt per citizen, per taxpayers. $250,000. That's crazy. We thrive off of debt, and it's debt that's created the greatest country in the earth. Right? It's great. It's created a lot of the infrastructure and projects that we've done has been with borrowed money and debt. So, I can bash it all I want, but I'm grateful for a lot of the things that we have in this country. Of course, some of the roads that are questionable around here, but anyway. All right, let me wrap up here because I have way too much stuff I got to take care of. So let's real quickly look at what happened economic calendar-wise, and I'll go to the markets today as well so we can see some of these beautiful gains. But here is the today's action. I wanted to bring this one up just because of these building permits and housing starts. You have numbers for housing starts increase, which is a great sign. You want to see that number. It came in line with expectations. Building permits weren't quite as high as they expected, actually contracted, but not a wild fluctuation. So all in all, that's fairly decent for the home building numbers. And again, we had the NAHB numbers yesterday, which were pretty positive as well. Later on tonight, we do have some Australian unemployment numbers coming out. That should be in about 4.5 hours. What else do we have? That's for today. Let me click or look at tomorrow just so you guys can see a sneak peek at that one. We do have quite a bit coming out for the U.S. You see you have unemployment claims, the Philly Fed Manufacturing Index, existing home sales, which they are expecting to slide. No real surprise there. We have seen the bond market dip a little bit, which means 30-year fixed rate mortgages are probably getting better. But still, They're expecting that number to go from 4.4 million to 4.3. You also have 3 members of the FOMC speaking, so be careful tomorrow, everybody. Any one of these guys and gals can say something that creates big swings. You've got Logan speaking at 7 a.m. Again, this is Pacific time, so that's 30 minutes into the trading day. You've got Barr speaking right as the market opens, and Jefferson speaking 25 minutes before the markets open. So a lot of heavy-hitting FOMC members will be making announcements tomorrow or speaking. And of course, right now the media is going to be asking them all kinds of pointed questions. Hey, what about this? What about that? What about the other thing? So could be a wild day for the markets based off of that. Now, as far as earnings go, I didn't bring up the page here. You did have Cisco Systems. They beat earnings and missed or down on the day. Target did rather well today. They beat earnings handily and were up a little bit. TJ Maxx. Here is the announcements for today, just so you can see those numbers there. There's your Cisco, your Target, your TJ Maxx, and then for tomorrow, 161 companies reporting earnings, but there are some big names. That's important. You have Walmart, the big dog, will be reporting earnings. And of course, based off of what Target did today, there's a lot of expectation that Walmart may be even better. You have Applied Materials, Canadian Solar reporting, more retailers like Ross Stores and Canadian Goose, but boo, Canadian Goose. And then ACB, Aurora Cannabis, is supposed to report, but they were supposed to report last week. There are about 30F. What's that, 30F? Our roads are so great. Go back, check most of the roads, 90%. Yeah, I agree, Pepe. I saw a really funny meme the other day. It was showing a road in Rome, and it was like, these roads were built 1,000 years ago. And there was like this beautiful cobblestone street, and then it showed like some street in the United States, and it was like, this road was built 2 weeks ago. It's got potholes and holes in it. They repair those roads. So, Tom, what do you mean by there are about 30F? I'm not sure what the 30F is, but okay, I think I got it. All right, well, that's gonna do it for me, guys. I gotta wrap up here. 38-minute show, probably the shortest one I've done in like a decade. I hope you enjoyed today's show. And again, this was not trying to scare anybody. It's just we have to look at the information that's presented. I don't see them doing anything definitive about the debt ceiling. These POS politicians are going to wait to the very last second so they can get exactly what they want. It's literally like they're just playing chicken, and they're going head on, and I'm not going to turn, 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 I'm not going to turn. And someone will turn at the end. They'll come up with some agreement and raise the debt ceiling. I can't imagine they would let it default. That would be the worst thing they could do for you and me as citizens. And if they do, vote them out of office. I don't care what side of the aisle it is, vote them out of office and move them. 30 FOMC speaking events per month. Yeah, that's true, Tom. And again, I'm not listening to what they're saying. I just knowing that, hey, this guy is speaking at market open. Barr is pretty significant. All right, I want to just be careful right on the open. Stay away for the first 15 minutes just in case. So there you go. Yeah, there's 30 or more. They're always speaking. So you think a deal will be done? Yeah, I don't think a deal. I don't think that they're going to be like, okay, we've resolved this issue. They're going to say, let's postpone it. We can't default. We haven't resolved this. Let's kick it to December. My guess is we get it kicked to December. I know, Oliver. Trump said let him default. It sounds nice to play hardball like that, and Trump's very good at that, at playing hardball to get what he wants. Defaulting on the debt would be so bad for you and me, I can't even explain how bad it would be, because now in the eyes of every borrower of the world, the U.S. cannot pay its debts. And if that happens, our status as the global powerhouse diminishes greatly. So you can't let it happen. You cannot default on it. You need to fix it we can raise it for a second, but let's put serious efforts in place to figure out how to get that balance back to normal and get it to a point where we are a manageable running business. This reminds me, there was a company when I was starting out trading called Block Trading. And Block Trading was, I apologize, it's a horrible story, but my buddy used to work for Block Trading and knew the guys, and these were two young kids, Chris Block and somebody else. They created this whole day trading craze, and they were dominating the day trading world. And he said they would go to parties, and you walk into their mansions, and there's piles of cocaine on the table, just reckless partying and spending going on all over the place. What happened? They lost their competitive edge. They blew all their money, and ultimately that business went under. Unfortunate, because if they were smart and watched their spending, tell people to bring their own cocaine to the party. But they would have probably been a dynasty and still there today. Unfortunately, they blew it. They did dumb things with their money, and I think our government's doing the same thing. Coach says the USD will drop 90%. Well, not overnight. not overnight, but could you see a 10% drop if they say we're going to stop? If the U.S. government says we are going to stop making payments to bondholders, then you're looking at 20% drop overnight, which would be catastrophic in my opinion. But they're not going to do that. You're not going to stop bond payments. You can't. That's how you're funding everything. That's how the Ponzi scheme is staying afloat, is you're selling bonds, taking that capital to pay off the bond interest. So there's no way that could possibly happen. Even the last Powell movement was negated by the markets in less than 13 trading hours. Yeah. Yep, as it was. So debt ceiling is now shifted. It used to be inflation was the most important thing. I think the attention that the debt ceiling is getting, because it's now more hardliners and really pushing the envelope and playing chicken even more, but we'll come to some agreement. I think it's kicked a can down the road till December will be my thought. All right, that's going to do it for me, guys. I got to run. I got another meetings. I got other classes tonight. So busy day for me. Hope you enjoyed today's show. If you did, hit that like button. If you didn't, that's okay as well. Just don't go bash me on social media. Let me know first what it is that you didn't like. You can email me at TraderMerlin@gmail.com. Actually, you can bash me wherever you want. I don't care. It's fine. But I always like to make things better and more efficient for everybody. So email me, TraderMerlin@gmail.com, or put your comments down below any of the YouTube videos. I'm going to do a show tomorrow on the biggest donkey of the year. I should wait till December, but it needs to be said, needs to be brought up. We'll talk about this one on tomorrow's show. It's going to be a whole lot of donkey on tomorrow's show. So I hope you guys join me. Send in your comments and questions and feedback, and I will see you all then. Take care, everybody. Have a fantastic remainder of your day.